So joining us today, we will have Harjas Singh at the end. Harjas is co-founder and chief product officer at Shares, an investing app which caters to Gen Z. We have Nicolas Fayon next to him, CEO of Jump, a startup that helps freelancers and gig workers access products like pensions, loans, and mortgages. Next to him, we have Amine Bounjou, co-founder of Card, a French challenger bank for the under-18s. And finally, on the end, we have Lavinia Osbourne, founder of Women in Blockchain Talks, a networking platform which encourages more women to work in the blockchain industry and also highlights the work of women already there. Don't forget, if you want to ask some questions, you can do that using Slido. Okay, great. So welcome, everyone. Thanks for joining.
Thank you,
Let's start with you, Nicolas. You're CEO of Jump, a French company that caters to freelancers and people in the gig economy. You're still quite a young company. You launched in 2021, is that right?
Absolutely, yeah.
Okay, but I feel like the gig economy is an example of how quickly work is changing. I mean, do you feel like finance and financial products are keeping up with that change?
Yeah, it's true. So first of all, thank you so much for the invitation. I'm very happy to be here. Yeah, I mean, we have a lot of different users. Part of our users are the white-collar economy, and a growing share of our users are from the blue-collar economy. And these users are very wide, like they're very different from one category to the other. So it's very difficult to get a very consistent product for everyone, because you can have like PhDs, you can also have maids, people, you can have teachers that work at your place, and all products is a good connection between your work and your bank, but we're not the real bank, so we are pre-bank. So the money that goes through Jump is hitting your pre-bank account before it hits your personal bank account. So we have to be very transparent about how it's generated. We have to be also very clear explaining where goes the money. So I would say that this is a bigger challenge, like explaining everything to a very different set of users.
And just a bit more on the problem that you're trying to fix. I mean, how difficult is it if you work in the gig economy or you're a freelancer? How difficult is it to get kind of the things that you might need to get you through your life, like a loan or a mortgage?
Yeah, I mean, life is quite hard for self-employed people. It's hard for white collars, but it's mostly hard for blue collars. These people don't have a track record. When they go and see their banks, they can't get a mortgage. They can't even like access the rentals markets. So yeah, what we're trying to achieve is to give them like all the tools that they need to have a happier life as a self-employed. So they don't have any status to create. They don't have accounting to do. It's much easier, and it's also easier because they get a work contract, pay slips that they can show their employer. And yes, this is in the end what makes them happy, to be able to carry on with their personal projects.
Yeah, I was freelance for a while as a journalist. It was very difficult to get any of these things. Amine, let's move on to you. You're co-founder of Card. It's 3-year-old now, Yep. Is that right? And you focus on the unbanked under 18. So that's a demographic you also believe that has been forgotten in mainstream finance. But last time we met, we talked about how you believe that leaving kids out of finance also creates this kind of taboo around money that sticks with them for life. I mean, can you tell me a bit about how Card is trying to introduce children to finance and also tackle those taboos at the same time?
Yeah, absolutely. So one of the two reasons why we wanted to build Card is basically that people don't talk to children about money. Inside families, you don't talk about it, and in school, nobody teaches about financial education. So the result about that is that it remains kind of an unknown topic and a taboo within families and within the younger generations. And the result of that is that, for example, in France, 80% of the population says they have a very, very weak financial knowledge. So basically that is transmitted from generation to generation. And we wanted to fight against that by bringing a product allowing families to speak about money from a young age.
Mm-hmm. Okay. And then Lavinia, moving on to you. So Nicolas and Amine have spoken about how to make mainstream finance more inclusive, but you're focused on the blockchain, entirely new area of finance. I mean, how are blockchain companies trying to make finance more accessible to a wider group of people? And are there any success stories that we can point to, or is it still kind of a work in progress?
think well, first of all, thank you for inviting me to this talk. And I think it's really important that we look at the history of money. And when you look at the history of money, you see that has been controlled by a certain demographic, and there is a taboo. Before I got into blockchain, I was very much into the world of financial wellness and financial education, and I can't agree with you more in regards to what you said in the essence of having conversations at home around money. And these children who grow up without understanding money become adults who are basically conditioned, we're all generally conditioned to go out and earn money, but invest, that's something different, mostly privileged and people of elite, or those who just happen to fall into that world or understand that there is a missing knowledge and decide to take it up on themselves. What blockchain does, because it's decentralized, it removes that middleman. And from the research that has been shown, and of course Women in Blockchain Talks is very much focused on women, even though we're open to all genders. And so the data shows that there's a number of women, intelligent women, women with degrees, who have said, coming into crypto, and yes, there's crypto winter, but coming into crypto, it has helped them to have more financial education. Why? Because there is no intermediary or middleman to say, you can come in, or you need to have this amount of money in order to invest in crypto. And the great thing about crypto that I personally like is it provides equity, meaning that if I only have £10 to invest in Bitcoin, Ethereum, ADA, whatever the crypto is, and Amine has 10,000, I'm not going to get a lesser interest rate just because the amount that I have to put in is lower than 10,000. And so with that being said, the individuals who have come into crypto, the research that I've seen and carried out is that this element of self-motivation and self-education has allowed them to increase their financial knowledge. So in my opinion, I believe that blockchain crypto is a great way for people to learn about money and to take more control, self-sovereignty over their finance.
Okay. Harjas, moving on to you, that brings us quite nicely to what you're up to. You're co-founder and chief product officer at Shares. So you're an investing app that launched last year. And you've just signed Venus and Serena Williams as ambassadors, so congrats on that. So far in this conversation, we're talking about giving people, educating people, giving them more access to products. I mean, where does investing fit in that? Why is that also important?
Yeah, first, thank you, Morgan, for having me. And great news on Serena and Venus. We're extremely proud for what they represent. I think the conversation around money and investing is also very skewed by gender. So, if you look at traditionally, men feel more comfortable talking about finance and investing with their parents, and not so much for women. So what we're trying to do is we're building a product that is intrinsically social. So we allow people to understand what their friends are buying and selling and what the wider investing community is saying about the markets. What this does is it helps with that education gap and the taboo around not knowing anyone that invests. And what we've noticed is that 45% of our investor base is women. So the product experience and the brand values that we are bringing to the market have also helped with democratizing access to finance for everyone. It's not just the access to markets, but also access to the kinds of investors that we want to see using investing products.
Mm-hmm. And I mean, I think Shares is really interesting. You come along at a really interesting time. I mean, everyone heard about kind of Robinhood during the meme stock craze. I mean, is there a risk of making something like investing too accessible? I mean, Robinhood got a lot of criticism for kind of making it easy for people to get into investing without kind of educating them about the financial risks around that. How are you thinking about that?
Yeah, for sure. But one thing that taught us was that there was something about community-powered investing. There was a movement that people gathered around and where they were like done with, hedge funds making money off of this whole business. So I think community-powered investing is here to stay. But as a platform, we have a responsibility when we decide to offer, let's say, complex financial products. That's exactly what happened with Robinhood, where they were offering products which are not necessarily safe and carry a very high risk, like margin investing, trading on money that is not yours. So I think for us right now, our users are very new. So we have a responsibility to start with education, start small, offer assets that are safer in risk, and we go along with their journey. And if at some point we do decide to offer complex instruments, they wouldn't come without appropriate disclosures and education.
Okay, so that's what makes you different from other investing apps out there. I mean, Amine, I know this is something that we've spoken about, kind of how you make card different. I mean, you're based in Paris. It's a city that is famous for being like crammed full of fintechs. And so, I mean, how do you make cards stand out? I mean, we heard from Monzo earlier, but why do I think it's 85,000 teenagers who are using card, why are they using card instead of kind of Monzo or Revolut or another challenger bank?
Well, I think it's very interesting, you know, what we heard about Monzo, because we have kind of a similar approach with regards to our community. So basically, we have created Card as a brand completely opposed to whatever existed in the financial industry. So the way we talk to our customers, the way they can reach out to us, we made the product extremely simple, you know, that will be more comparable to the product they use in their daily lives, like a Spotify or a Netflix or a Snapchat rather than a bank. And I think in that sense, we have really created kind of a strong brand with teenagers where they feel safe, they learn about the basic concepts of finance, and you know, it's not like this anxious big bank that their parents use. And on the other side, the way we approach also the relationship with parents, which is very important, because obviously we have 85,000 teenagers, but we also have their parents who are our customers, and they use the product on a daily basis, whether it is for sending money to their kids or looking at their transactions, or also learn about how to better educate their children. And I think we've done a good job with parents as well by creating a brand that brings them closer to their children. We're basically going to provide a lot of content about how much you should give to your kid, how should you understand where your kids spend the money, because there are new ways of spending money that concern teenagers, but that parents really don't know about. Like, I'm thinking about like selling clothes online, or you know, buying things from the internet. And parents are not really used about that, because you know, obviously there's a huge generation gap between kids and parents. It's between 20 to 40 years old difference. So we bring them closer by providing that content and providing a product that actually kind of breaks down these barriers. And I think that's what our customers love with Card.
And when we spoke before, you also talked about how Card's differences from its competitors helped it in this kind of economic downturn. You've noticed kind of investors changing their attitude towards your business model. I mean, can you tell me a bit about that? Yeah,
that's a very good point. So basically, our approach has always been to build a profitable company and sustainable, and you know, to be less kind of dependent from whatever the wind goes in terms of you know, economic context. So basically, we are charging fees, and we've been charging fees since the beginning, since our launch, and we have profitable unit economics since the first day. And obviously, we've been hearing over the past years, you know, when kind of the context was a bit crazier than today, and there were, you know, massive rounds of financing for companies that have fundamentally bad unit economics. Some investors were telling us, yeah, maybe you're not growing that fast, you're like too focusing on building something that is maybe too profitable at the moment. And right now we're hitting like the exact opposite. Like, you know, we're kind of more encouraged by investors to pursue the direction we have chosen, which is really to build a business that will be profitable in a few years from now.
And Nicolas, I mean, how is Jump approaching growth in a downturn? I mean, does this have an impact on the number of people who end up freelance or in the gig economy? Does that impact the number of people using your platform?
Do you know what? When we started to work on the project, it was right in the middle of COVID, so we didn't know really what was going to happen. And in fact, what we noticed was the fact that people experienced freedom. They experienced a different way to work every day. And more people wanted to keep that, to have a better life every day. But they also wanted to feel safer in a way. So it was exactly why we created Jump in a way, because we wanted people to choose what they do, work when they want to work with whom they want to work, and choose the price they want to work for, whilst keeping all their security. So I would say that we had chance in a way, and the context helped us, and we kind of helped the context for all the freelancers who wanted to keep a good life, secure life. So yeah, it grew a lot, the number of freelancers.
Okay. And then, Lavinia, I mean, what is the blockchain industry's relationship with more mainstream finance? I mean, I know that kind of cross-pollination isn't always a good thing, and we've spoken about kind of the impact that people moving from kind of traditional banking into blockchain industry can have. I mean, is that a positive or is it a negative to have this kind of channel between the two industries?
I think it's a mixture of both. I mean, the key thing about blockchain, it is decentralized, so there is no one who can say, well, you're a traditional finance company and therefore you can't come in. And people are innovative, and what I've seen across the board is a number of people who have worked for traditional finance companies have left to come into blockchain, come into crypto, and just blockchain on a whole, simply because they see the growth and the potential of this space. I mean, this space is not going away. Yes, we're going through crypto winter. Yes, there's a lot of work that needs to be done in regards to regulation and compliance, but the potential of this space is huge. And we're seeing this already with the likes of JP Morgan, MasterCard, all coming into the space. So, you know, there's a lot of innovations and development in DeFi, decentralized finance. And also we're looking, if you look at different countries, sometimes we focus on the country that we're in and how it's affecting it, but you look at a country like Africa, and they've really embraced crypto, and it's a space where Africa is just an economy that is growing. And you look at M-Pesa. So M-Pesa is a mobile app that grew hugely simply because it was a way for people to access funds via their phone. And they've now done a collaboration with Binance, which in regards to volume is the biggest crypto exchange out there. And so that means they're bringing crypto and crypto trading to those individuals who use M-Pesa on their mobile phones. And I think we also have to remember that there's many people in the world, you know, 1.7 billion people globally are unbanked. So how do they access funds? How do they access traditional finance? And blockchain is a solution to that. So, of course, people in the traditional finance see that, and they're coming into the space, and they're creating solutions and innovations to move that solution or to create solutions for that problem.
Okay. And then just finally, Harjas, I mean, how are you thinking about growth at Shares? I mean, I know that your company is making kind of an effort to reach a diverse audience. You mentioned trying to reach out to a lot of women within the Gen Z bracket. I mean, how exactly are you doing this, and what are the challenges you're facing?
Yeah, so there's a couple of ways we're approaching this. First, I think it's very important to culturally change the feeling about investing. I think for too long it's been a taboo, it's been a topic that people haven't been super interested in. So we're doing a lot of organic partnerships. We actually partnered with Thursday Dating, and we did an event with them where essentially the drink prices changed every hour to mimic the stock market. And the other thing we're actually trying to do is partner with a community of female investors called Your Juno, with the goal being that you don't have to reinvent communities and clusters of people who are interested in investing. It's more about striking partnerships with them and giving them an inclusive platform where they can come on board and invest. An example is if we bring this community on board, what is it that women would like to see? What are the financial products that we can build for them? What is the roadmap that we can actually give this community and build it at Shares? So that's currently how we're approaching that. And the second point is actually launching a feature called Communities, literally, which is first 6 communities that we launched, which allows you to meet like-minded investors within the product based on your interests and get the discussion going.